Hi everyone, this is Nick getting ready for the week. A full week this week. We have a full schedule. Emotional drivers, I believe Powell speaks maybe twice and some other people also speaking. We have quite a few inflation reports that might be important for the headlines. The rules of engagement have not changed. The bulls are in charge until they say we've had enough. How high can they go? Let's answer that by looking back as to what happened on last week. We had a rally of about 2% in the S&P, which is what you're looking at. It's basically this much. And the Qs were about 4%, I believe, so a little bit more than that, because the strength was concentrated in the large caps, the giga caps at this point. Those two indices, the ETFs, I should say, they don't represent the market well. They represent incredible strength concentrated in these chosen few. That's why we have a difference between Main Street and Wall Street. So this is where the logic breaks down, because if we were to neutralize the effect of the mega caps, we would have a chart that looks like this. So this is the S&P instead of the SPY. This is something called the RSP, and this neutralizes the effect of mega caps. Every company matters the same. And you can see that the high was placed in April. We've said that before. Lower highs, higher lows. We're coming to a decision. Maybe this week, maybe next. These guys have to make a decision. And they're going to have to move big. Down or up, we'll soon find out. We are in the target zone right now. If we go to the SPY, the breakout was from 460 down in this area here. This is the target zone. It's a zone, so it can vary a little bit. That's the Russell 2000. These are not tiny companies. They're in the billions, but they all collectively fit inside of any of our top 3 large companies. So Apple is bigger than all of them put together. These guys need about a 6% rally. Now, if this week the bulls can pull that out, then we have a unanimous, at least potentially, a synchronized rally that can take us another 10 to 15% up. At some point, we have to come back to just touch base at the baseline. And right now, it's about 15 to 16% correction. Just to go back to that 460 neckline. Like here, you broke out, you came back, you established footing, you ran. But they never came back to establish footing from this breakout. We keep going. Mathematically, it's hard to stop this beast, which makes it dangerous. It will take a catalyst to change this behavior. So the catalyst can be something breaking, I hope not, or someone saying we've had enough, someone important, we've had enough, and let's have a correction, and we will have a correction. Now, a sign of, quote, fear that could be building. I say could because it's not there yet. I want you to keep an eye on Bitcoin. If you don't know how to look at Bitcoin ticker, look a ticker called BITO. They need a breakout. And they've lost a step. And this, to me, could be a better gauge to global risk appetite, not US-centric. Another thing to watch, which probably is more tangible for a lot of people, is this guy. So this is NVDA, the king of stocks. Yes, it is the king of stocks. This is the stock that actually started it all, right? This is the company that saved the market last year in May and reconfirmed it this year in May. So, I said a while back that we could pop and drop, and we did. We popped and we dropped. We just bounced off of here. That was super lucky. And then we're popping again. So basically, they repeated this thing. So my concern is still there. Now, in this environment, it should be a no-brainer that NVIDIA breaks out of this prior fail from last week, gets into this yellow box. If they don't do that, and they decide to come back down and trace out this guy, things that would make you go, Again, the rules of engagements are, I assume the bulls are going to win until they decide that they've had enough. There are no bears on the field. How do I trade? I will continue the short rallies, and with the bear call spread perspective, with balance if I can. Say I'm short a bunch of stuff, I need to buy some calls in case they keep rallying. If I'm long a bunch of stuff, I need to put some bearish positions in order to balance out my books. When I get bearish trades working my way, I booked them faster than normal. For example, I recently shared a short position on JP Morgan. Well, we got lucky and it's going our way quickly from immediately when we took it. So I may decide to close this position before the end of the week because JP Morgan will report earnings. I'm not so sure I want to go into earnings with this coin flip idea risk in my pocket. So I may trim it down significantly or just completely take it off and call it a win.